Welcome to Money Market at Bank of Tampa podcast. We highlight the businesses, business expert advice, the local economy, and points of interest in the Tampa Bay market. Follow us on YouTube, Spotify, Apple, or wherever you find your favorite podcasts. And please feel free to share this episode with a friend or colleague. I'm your host, Owen LaFave, the Pinellas County Market President for the Bank of Tampa, Tampa Bay's oldest and largest community bank. And today we're joined by our one and only Stacey Pittman to talk about the ins and outs of wealth management. Stacey serves as our EVP and Managing Director of BT Wealth Advisors. That's the wealth management division, that's a mouthful, of the Bank of Tampa. So she's responsible for overseeing all of our investment and wealth planning services that we provide to families, business owners, and professionals. Stacey, you have an amazing background, and I don't want to leave anything out. So tell me a little bit about your background.
Sure. So I've been in financial services for over 25 years. First joined Raymond James Financial right out of undergraduate.
From where? Harvard.
Yes. So graduated from Harvard and honestly had no idea what I wanted to do with my life. I started off as an engineering major. I was always really good in math and science, so I thought I was going to be an engineer. And started off and took multivariable calculus, intermediate physics, and I think another science class my first semester, classes. And absolutely kicked my butt. And so I decided to pivot and I actually ended up a government major, go figure. But it was really just because I really enjoyed a government class my second semester of freshman year.
Okay.
And it had a lot of economics overlay to it. And so decided to be a government major. And then fast forward to senior year, I had no idea what I was going to do. I knew that I had college loans that I had to pay off,
so I needed working in government.
Nope, I needed to make money, and so I decided to go through the recruiting process, and really didn't know a whole lot about the corporate world at all. My parents both worked for the post office. We were very middle class. Didn't have a lot of family friends who were in the corporate world whatsoever, and so I went to a lot of information sessions that were held by management consulting firms and also investment banks. I did intern for a management consulting company the summer before my senior year and had a job offer from them to go work in either Northern Virginia or Charlotte, and ultimately ended up interviewing at Raymond James, was extended an offer, and started my career in investment banking.
Okay. And so everybody knows, too, you also hold several certifications, so including a chartered financial analyst, certified financial planner designation, and also a certified private wealth advisor. You've got a ton of licenses, too, that also come with that. I don't know that we necessarily need to get into that. How do we get you at Bank of Tampa?
So I came to the Bank of Tampa in June of 2014, about 3 months after my youngest was born. And my husband and I have 5 children, which is a lot.
That's a lot.
It is definitely a lot.
You got me by one.
And so it was a little bit of just a lifestyle pivot for me. And also it was a professional pivot. So, it's hard to develop really deep personal connections with clients where, for instance, with a big institution, they might have an investment committee, and that investment committee might change from year to year. And so it's very difficult and especially if you're only seeing those clients maybe once every year or two, it's very challenging to develop relationships. What really appealed to me about the Bank of Tampa was just how much we focus on developing relationships, right? And so for me, it was a wonderful opportunity to, first of all, come to an institution that has such, great respect and history within the Tampa community, and also to be able to both live and work in the Tampa community, which I wasn't doing previously. I was living in Tampa, but I was traveling all over and working in Pinellas, but also, my clients were, again, across the United States.
I absolutely can relate because I had worked at a larger institution before I came here. And what I had missed, because I actually started in community banking, was going to the grocery store or going out with a client and being in the community and running into people that you do business with and developing those personal relationships. And they're actually in the market. So I can personally relate to that.
Right. Which means you have to actually look good when you go to the grocery store.
There's but, they accept you. I think it's a little jarring at first when you're both walking around in flip-flops and shorts.
Right,
and you're like, oh, this is awkward. But, hey, we're all people.
Yeah.
So BT Wealth is a great success story. So when you started there, we had assets at $200 million. Today, we're at $1.4 billion in assets under management. Is that right? Are we a little higher than that now?
So combined between our wealth management, BT Wealth Advisors, and our trust department, we have $1.4 billion. On the BT Wealth side, we have about $1.1 billion. So yes,
So
huge
combined,
growth from $200 million up to $1.1 billion.
Incredible story. So I mean, what's the secret sauce? What'd you do? What did the team do?
So I think what we've done a really good job of is just building our team, right? Because, you think about wealth management and it is so personal for people and it is such a trust-based business. And so you have to have the right people who are both very, very knowledgeable, right? And can guide our clients on the right path, but also have those softer skills. Right. And so you need people who are able to, genuinely connect with clients, really get to know them, understand their situation, and then provide great advice. All of our advisors also have the credentials of the CFP. And so, you mentioned that in my bio, the CFP is the Certified Financial Planner designation, which is a very important one in the industry, very well respected, very well recognized.
Sure. And
there's a strong ethical component to the CFP designation. And so CFP professionals are held to the standard, a higher ethical standard, where their recommendations need to be in the best interest of the client. Okay. And so having the CFP is very, very important. It also carries, like many other certifications, a continuing education component. And as annoying as that might be, from time to time, it is very important because so much changes in terms of tax law, estate planning,
and
so
a constant state of flux. Yeah.
Exactly. Yeah. And so it's the important part about the continuing education component is that our advisors are, consistently learning, right?
Got it.
And being able to respond to those changes that we're seeing, in let's say tax law, for instance.
So it is just, if I can summarize that, it's people with relationships that are trustworthy, that have the appropriate accreditations and education and background. So
absolutely.
That's the secret sauce.
Absolutely.
So simple kind of blocking and tackling with great people.
Yes.
Over time, people's needs change.
Exactly.
And their desires and risk tolerance. So is there a regular check-in that you all do? What does that look like?
Yeah. So when we build out a financial plan, typically we're revisiting that plan at least once a year, preferably twice a year. Usually circumstances don't change that dramatically within a 6-month period, but we always tell clients, if something meaningful is happening in your life in the interim, give us a call, right? And that's the nice thing about the relationships that we have with our clients is that they are paying us to basically be available at any time, right? Mm-hmm. So they call us, they email us with any questions. Sometimes, I'll give a good example. I have a client who works for a privately held company, and she is being offered an equity package. And so, we're having conversations around what that looks like, layering it into the financial plan so we can understand the tax implications of it, the timing implications of it, all of that, right? Mm-hmm. So typically we'll revisit the plan once to twice a year, but then there's always other conversations that are occurring throughout the year. So, we might have just a quick investment check-in, talking about the markets. Whenever there's times of volatility in the market, we're typically proactively reaching out to our clients, calling them, checking in, just making sure that they're okay, reassuring them. So so we're in constant communication with our clients throughout the year.
Well, and you talk about things changing, so it's interesting. So I want to talk about college planning a little bit.
Yes, absolutely.
Because I've got 2 kids that are getting ready to go to college, and it's one of those things that you prepare and plan for, and there's a plan. but you never really know how the plan is going to be executed because you don't know where they're going to go to school until the last minute.
Exactly.
And then you hope that everything aligned and you made the right decisions. But how do you coach individuals to plan for college? What does that look like?
Yeah. So I love talking about college planning. Maybe it's because I have 5 children of my own, including 2 in college. But it's an interesting topic because it's actually one of the most challenging to plan for. And the reason why, and you alluded to this, is the fact that you really don't know what the cost is going to be until the 23rd hour, right?
Yep.
And so my best advice for clients is to, set up their college plan really from day one, right? And so, when we're meeting with our younger clients who perhaps, don't yet have children, but are planning to have children, as soon as the baby is born, we're saying, all right, let's set up a 529. Let's talk about that. As soon as the child has a social security number, we can set up a 529. Now, the one of the challenges of planning for college expenses is the fact that also the range of outcomes is so significant, right? And so, you think about if your child is going to a Florida public school, they might have Bright Futures,
right,
which could cover 75 to 100% of their tuition. Now, you're still going to have room and board and, all of the other expenses.
By the way, which I found out through this process, also fees. So fees are 50% of what your credit hour costs, which was interesting. Now we've got Bright Futures and a 529 plan, so everything was covered. But it's 50% of your total cost, not including room and board and meal plans and all those kind of things. But
Yep. Now, we're very fortunate in Florida because, again, we have Bright Futures, but also the cost of public school tuition in Florida is very, very low. I think
Very
it's
reasonable.
actually one of the lowest of all of the 50 states. And so you think about, on one end of the spectrum is 4 years at a public school, Florida public school, or public university, where you have, let's say, 100% of tuition covered, all the way up to some of these private institutions where, they might be running $75,000 a year, right? So, on one end of the spectrum, you might have, let's say, $20,000 to $25,000 a year of room and board and things like that, versus actually probably closer to $20,000 a year of room and board. Maybe your child might be in a fraternity or sorority, and so you have additional expenses associated with that, all the way up to 4 years costing you $300,000 plus, and that's in today's dollars. So you think about when you're trying to help a client plan when the child is first born for 18 years from now, when you have no idea where they're going to land on that spectrum,
Right.
It's challenging, right? Now, one of the nice things about 529s is that there is a lot of flexibility if, for instance, you end up overfunding a plan, right? And there's also been, as of the end of 2023, with Secure Act 2.0, you can now, if you have a 529 that's been in place for 15 years, you can now convert $529 to a Roth IRA for that child, which is a wonderful benefit.
I was excited to learn that.
Up to $35,000. So, that's one option for clients who have perhaps overfunded a 529, right? Another option is that you can change the beneficiary, right? So, if you have one child who goes off to college, they don't need all of their 529 funds, you can change the beneficiary to, another child or even a future grandchild. So there's also some, interesting estate planning opportunities with 529s as well. So I'm a big proponent, in case it hasn't come through, big proponent of 529 plans. But typically when we meet with clients to talk about college planning, the question that we have is, first of all, we outline the range of outcomes. And then we talk about, what's sort of the minimum that you want to make sure is covered. And so in some cases, it might be a client saying, well, I just want to make sure that room and board for a public university in Florida is covered for 4 years.
Right.
And I'm good. Other people say, you know what? I want to make sure that my child can go to any university of their choosing, the best school that they can get into, even if it costs $75,000 a year in today's dollars. That's what I want to plan for. And so, and actually in our financial planning software, it's really cool because you can choose the university and it will show you exactly what the costs are today.
Oh, no kidding. Okay.
And then you can grow it in the future. So that's actually one of the fun conversations that I have with clients where, and usually the spouses will have different opinions about which school they want to put in.
Especially if it's a divided household. Right?
Yeah. So always fun conversations around that. But
do you advise, so when you're in an airplane, right, and there's a crash, and they always say put the mask over your face first. Do you advise your clients when you're doing your overall financial plan to take care of your financial plan before we're talking about college?
Yeah. So, and that's what's really nice about the process is, again, we're looking at all aspects of their financial future. And so the first thing we really start with is retirement planning, making sure that there are sufficient assets available for our clients when they eventually retire. Mm-hmm. And retirement means different things to different people.
It does.
Right. And so, it used to be back in the day where, you get the gold watch and, 65, you ride off into the sunset and now things are different. Right. And so, especially for our generation and certainly for our kids' generation, retirement might mean pivoting. Right. And so, when I talk about retirement,
career,
right.
Yeah.
When I talk or consulting or, whatever it might look like. And so when I talk about retirement with clients, it's, at what age do you want to have the freedom to not do exactly what you're doing today and to be able to pivot in some way? And the financial aspect is just it's not a factor, right?
Got it.
So the first thing that we focus on is retirement planning for the client. And then we'll overlay things like, college planning. And so, if I present the plan to them because they say, I want to have as much money as possible in their 529s, 15, 18 years in the future, but we're showing this doesn't necessarily work and you're going to have to work longer than you told me you wanted to pivot at 60. This is going to result in you not being able to pivot until 65. Mm-hmm. Are you okay with that? Right. And what
really figuring out what their goals are. I mean, basic. What do you want to do? What do you want your future in life to look like?
Yes. And educating our clients so that they can make educated decisions. Right.
Right. Got it. So I do want to talk about the market a little bit.
Sure.
As it stands today, we're in July, so I don't know exactly when this will air, but we've had some recent. So the jobs market looks like it's starting to soften a little bit. We just got a CPI print yesterday that was favorable. So it looks like we may have the ability, or the Fed may look at the market and say, okay, in September we can get a 25 basis rate cut. Yep. We might get 2 this year. Who knows? Maybe it is higher for longer, just to make sure inflation doesn't go away. If you had your crystal ball, what's your prediction?
Sure. So I think that the Fed has been very, very data dependent, really coming out of COVID, mm-hmm. right? Which is why we saw such a dramatic lift in interest rates when we did back in,
they got a little behind.
2021,
right?
Yeah, but we could
transitory inflation. Yeah,
exactly. So. They're extremely data dependent. And so I think that some of the recent economic data that has come out is more supportive of their ability to potentially cut rates at the end of this year. Whether that's 1 rate cut or 2, I don't know. I think that there's a higher likelihood that we do get at least 1 rate cut this year than perhaps 3 months ago. If we were having this same conversation. And it's because we are starting to see some weakening, I think particularly in the lower and middle income consumer.
Sure. No, I mean,
we're seeing some signs of stress. You look at delinquencies and let's say credit cards, 30-day delinquencies in credit cards and auto loans, those are starting to tick up higher than pre-COVID levels. Certainly not where we saw them in the Great Recession,
sure.
Thankfully. And it's really, I think, a product of the fact that we do have such a strong employment backdrop.
Agreed. And we're still trying to backfill for the Great Resignation. So we had so many people left the market, I think, which has kind of held up the labor markets. And because you couldn't find people, I think employers are holding on to employees for a lot longer. So we're not seeing the labor market thankfully break yet.
Yes.
But what's also been interesting to follow is it maybe more so at any other time in my career, the volatility in the bond market. Bond market has always been stable. Sure, it goes up and down, but I mean the volatility to watch it is crazy. And of course, in banking and in finance, a lot of the pricing that we have historically done, we're looking at cost of funds and a cost curve, but we do base on the Treasury because it is supposed to be the no risk interest rate. It looks like, or at least compared to last year, the rate curve is steepening a little bit. If the Fed decides to cut, maybe we'll have a normalized curve. But so with all the volatility in not only the bond market we talked about, but the stock market too, which has been wild, and of course has had some great performance and has hit some record highs. How do you coach clients, advise clients on dealing with all the adversity?
And
volatility.
Absolutely. So we spend a lot of time in terms of stress testing portfolios. And so we have some great tools where we can present a potential portfolio to a client and say, this is how this portfolio has performed long term, but more importantly, during times of stress, this is how this portfolio has performed. So, going back to the Great Recession, this is how this type of portfolio, this particular mix of assets, right? So mix of stocks, mix of bonds, diversification. This is how this would have performed back in the Great Recession or back, in the initial months of COVID, right? Also, in a high inflation environment, this is how this portfolio might react. And so that's
is it
where
just to check in, like, are you okay with this level of risk, right?
Well, and it's really on the front end. So when we're first presenting a proposal to a client, and it's all driven by that financial plan that I talked about before. I tell clients I never want to take on more risk than is absolutely necessary to achieve your goals.
Fair,
right?
Yeah.
And so, it's a iterative process in terms of determining, what type of portfolio is going to align with the type of growth that we need in order to achieve these financial goals in the future. Once we come up with that proposal, then we're stress testing it to make sure that the client is comfortable with, what happens if the market sells off 20, 30, 40%. This is how this type of portfolio might react. Are you comfortable with it? Right? And so, and then, as we go along in the relationship, if we do have that volatility in the market and the client is not comfortable, right? And they say, oh, well, this is, I know I said that this was going to be okay, but it really doesn't feel okay. And I'm tempted to sell out of the market, right? Which is the worst case scenarios. We'd never want a client to sell out of the market when it might be down 10, 20, 30%. That's when we revisit. We say, okay, let's talk through this, right? Let's get through this volatility, and then let's talk about potentially repositioning, because we don't want, if this feels uncomfortable now, the last thing we want is, when they're 10, 20 years older.
Right. I mean, that timing is everything. When you're in your 40s, maybe a 40% drop in the market isn't a big deal because you've got, another 20, 30 years to overcome that. But, you're sitting at 62 and we're having a different conversation.
Right.
So which probably ties into just asset protection strategy. So what do you recommend to clients?
Sure. So let me talk a little bit about insurance and then perhaps the estate planning, if that's where you're going with it.
Then we work into trust?
Yeah.
Okay.
So first of all, on the insurance side, with our financial plans, we can stress test, any type of, just unexpected, terrible outcome, right? So, premature death. Disability of a client, disability of a spouse. And so we can say, all right, if this were to happen today, what strategies do we have in place already, from an insurance standpoint, and is that sufficient, right? And then we can make specific recommendations about, do we need to establish new coverage? Is there already ample coverage? But it gives the client the peace of mind that, if the unexpected were to happen, that it's not going to be a financial catastrophe for their family. Okay, so that's on the insurance side, and then on the estate planning side. So this is where we do partner with our friends over in the trust department. One of the questions that we always ask clients is, do you have an estate plan in place? Right. That's one of the first questions that we ask, because we want to make sure that, at a very, very basic level, they have a will. Mm-hmm. Right. And then if it's appropriate, that they've established other vehicles, like, for instance, trusts. If they do have an estate plan, and let's say, sometimes they'll say, well, I have one in place. It was written 15 years ago, haven't revisited it. That's when we'll say, well, can we bring
dust that thing off?
Can you share your plan with us? And then can we share it with our trust department and have them provide an overview of it? And so then they'll come in, one of their trust advisors will come in, meet with our clients and say, this is how your estate plan reads today. This is what has changed over, let's say, the last 15, 20 years in terms of tax law. And these are the things that you might want to consider updating, right? So that's one of the biggest things. And then also just constantly reviewing beneficiary designations. That's one of the, one of those hot buttons that I have is just always making sure that our clients know what their beneficiary designations are, mm-hmm. whether it be on a 401k, a workplace plan, or for instance, with their IRAs, and making sure that those beneficiary designations are still appropriate.
Sure. Okay.
Because things happen.
Things do happen. Yes, it's sad, but it's the reality of life. I do want to a little self-indulgence. I want to talk about gold a little bit. Reason being is it's one of those things that has a tendency to be very topical, and you throw it in there with, crypto potentially and maybe the place for gold in the portfolio. But I also feel like any podcast that I listen to that's financial oriented, there's someone pitching you have to invest in gold, and it's an inflationary hedge. But also, and maybe a little self-indulgent, but there seems to be a concerted effort to move away from the dollar as a reserve currency. So the BRICS effort, which is Brazil, Russia, India, China, South Africa, is trying to establish like a separate currency or agreement to move away. Saudi Arabia is now accepting petro contracts that are non-dollar denominated. Where do you advise clients if they ask you where does gold and where should it fit in my portfolio?
Yep.
So where does gold fit in?
Yep. So I can't speak specifically to specific investments, but I do get questions a lot from clients in terms of if they have a specific interest. So whether it be gold or something like crypto or even an individual stock or that
Nvidia, Tesla,
right, correct,
Magnificent Seven.
Or a specific sector that they might be interested in. And so, I do think that there's a place in a portfolio for those specific interests that clients might have. Now,
this is your play money.
My advice is typically, no more than 5 to 10% of the portfolio being allocated to, those types of sort of, tangential investments, right? But those should not be counted on to really be a part of the core part of the portfolio that is really what's driving our clients' future goals to be achieved. Now, I personally love income producing investments, right? I have several clients who live off of the income that is generated from their investment portfolios. And so I tend to favor those and gravitate more towards dividend-paying stocks.
I was going to say dividend-paying stocks. Real estate?
So many of our clients do have investments in real estate. I have some clients who have investment properties, for instance, and that's a meaningful driver of their cash flow. And so that is something that we model in and we'll look at for them. Obviously, we don't have real estate in our investment portfolios, but typically they'll have that outside.
Sure. So if that person is you're having a conversation with someone and it's that person that's looking at 60 that wants to step away and do something different, that 5 to 10% of the portfolio, do you discount that and say we're going to look at the other 90 to 95% to get you to there at 60?
So typically what we're doing is we're looking at the composition of assets that they have in their portfolio and how that portfolio has performed historically. And then we'll discount that a little bit just naturally to be conservative. Mm-hmm. And that's what we assume going forward. So now, with that, let's say they have that 5 to 10% and it's really speculative, then we'll sort of carve that out.
Okay. So I want to ask you a couple personal questions too. But before I move on from investment advice, if you had to give one piece of wealth investment advice to somebody, what would it be?
It would be to, just like you go to the doctor once a year, make sure you know what your financial situation looks like and review that at least once a year, right? So, sitting down, if you're single by yourself and just, looking at your balance sheet, creating a balance sheet, knowing exactly what you have, looking at things like beneficiary designations to make sure that they're appropriate, and perhaps using something simple like an online calculator to kind of get a sense of, am I going in the right direction, right? Am I where I should be in terms of my savings at this point? So, and then if you're married, sitting down with your spouse. A lot of times, one spouse handles all of the finances, mm-hmm. and the other spouse, it's just not necessarily in their wheelhouse. Bringing them in so they know exactly, what is owned, why they're invested in the way that they are, right? So that's one of the big conversations that we have with clients is just, knowing what you own and why you own it. There should be a purpose of everything that you own in your portfolio. It should be, it should be aligned with a specific goal.
Like, so alignment, get your annual checkup.
Exactly.
So get your annual physical.
Your annual financial checkup. Absolutely.
So you're involved a lot in the community. Tell us about your involvement and how you approach that.
Sure. So I've been involved in a number of just wonderful organizations over the years. Probably about a year and a half ago, I rolled off of the board of Champions for Children, which is just it's a phenomenal organization. Yeah. Unfortunately, 1 out of 7 children will experience abuse or neglect at some point in their lives. And so Champions for Children has just wonderful programs that really empower families, even as young as when parents are pregnant with their children, right? So they're pregnant. They have a boot camp for new dads program, for instance, which is wonderful, where veteran dads of newborn babies, that are about 3 months old, will actually bring their baby and teach the other dads how to do things like change diapers and talk about things like shaken baby syndrome and just wonderful prevention tools. So great organization that I had the pleasure of being on the board for about 6 years or so. I was also briefly involved with Girl Scouts of West Coast of Florida. I served on their finance committee. I've also been involved with my girls' school. So I was president of the Parents Association.
Oh, wow. That's full-time
and also
job.
the treasurer. And so I rolled off of that last year. So as of right now, I'm actually looking for a new opportunity in terms of a board. So, if there's anything out there, you let me know.
Or maybe someone will reach out to you. I don't know if like you, but every organization that I've been a part of as a banker, the first thing they're like, we need a treasurer.
Committee.
Yes, finance committee.
Yeah.
Yes.
No, I love being on finance committees, investment committees. That's really my wheelhouse, and I do enjoy it very much.
I've just embraced it finally. I wanted to diversify at some point. I'm like, do I always have to be the treasurer? And so that's that's my lot in life, and I've accepted it. So, Stacey, I think a lot of people will look at you and your success, and especially a lot of women, just admire what you've been able to accomplish and balance with family. Kind of looking back, if you have to give some advice to someone younger or your younger self, what would it be?
Yeah. Well, certainly for my younger self, it would be to take risks, right?
Okay.
I think I was always, when I was younger, I was always so careful about, and scared of making mistakes. And so, my advice would be just don't be afraid to take risks, right?
Okay.
Because even when you make mistakes, you learn so much from your mistakes. You really do. So that would be the first piece of advice. The second would be just, meet everyone you can. I was much shyer when I was, a young professional, and I was scared to ask people questions for fear of,
That's shocking to me.
of looking,
Now.
of not appearing like I knew what I was talking about. And so that would be the second piece of advice, is just ask lots of questions, don't be scared. And it just, and develop all the relationships that you can with people.
That's great advice. Any parting words, anything else you want to share that we left out?
I don't think so. This has been enjoyable. Thank you,
Good.
Owen.
Well, Stacey Pittman, thank you for coming on Money Market.
Absolutely.
If you have a question or future show idea or would like to be a sponsor, you can send us a message at moneymarket@bankoftampa.com or find us on LinkedIn, X, and Facebook, and on Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing, and we'll see you around in the Money Market.